Is Iowa facing a homeowners insurance crisis? When you think about skyrocketing insurance rates, you're probably thinking about California and Florida. I mean, after all, they're subject to forest fires, landslides, hurricanes. But isn't the Midwest relatively mundane, weather-wise, meaning our insurance rates would be lower? Try again. The U.S. Senate Budget Committee recently debated the cause of the insurance crisis plaguing homeowners around the country. There was plenty of finger pointing, with Democrats blaming climate change and Republicans calling out high government spending and inflation as the root cause. The list of states facing serious challenges beyond the usual coastal culprits included Illinois, Michigan, Utah, Washington, and Iowa. Look, politicians can debate the politics of the whys and hows until they turn blue in the face. Insurance companies do not care. They're solely interested in hard data and risk calculation. The writing, it's on the wall. Climate change has and will continue to increase the occurrence of extreme weather events, which costs insurance companies big money. And inflation, well, it's doing nobody any favors. Hi, Emily Farber here, your favorite Iowa YouTubing realtor. If you're interested in all things real estate and Iowa, hit that subscribe button and give me a thumbs up to let me know you're watching and you appreciate this kind of content. Rising rates are an issue in Iowa as we continue to experience more extreme weather like derechos, tornadoes, and hail. It all comes down to money. Insurance companies are businesses and their goal is to make money. Extreme weather events cost them dearly. So let's say your house burns down. Oh no, that is terrible. But it's an isolated event. Hurricane-level derecho winds and hail, well, those can destroy roofs and siding through a wide swath of territory. Take a look at this chart detailing the profitability of homeowners insurance in Iowa all the way back to the year 2000. In 2023, insurers lost money on homeowners insurance coverage in 18 states, which is more than a third of the country. According to a New York Times analysis of financial data, and this part is a bit of a surprise, most of the states in which homeowners took a loss are the states in the interior of the country, places hit by tornadoes, derechos, severe thunderstorms, hail, and wildfires. As a result, many insurers have raised premiums, narrowed coverage, dropped customers, stopped underwriting new customers in those areas, and in some cases, completely withdrawn from certain states. A May 2024 report from Moody's Ratings showed that more than 90% of the country experienced double-digit rate increases from 2019 to 2024, and in some states, rates jumped 60% in a 5-year period. And in 2023 alone, some states saw rates increase as much as 30%. In addition to insurance companies facing challenges to their profitability due to weather-related losses, they're also facing difficulties from inflation, increased material and labor costs, continuing supply chain bottlenecks, all of which increase the cost for repairs and rebuilding of homes. The cherry on top this mess is that people are moving in droves to areas at higher risk of flooding, hurricanes, and wildfires. Nationwide, the U.S. property and casualty insurance industry saw $21 billion in underwriting losses in 2023 and $24.8 billion in losses in 2022. Homeowners insurance in Iowa took a major hit in 2020 when the derecho struck our area on August 10th and just tore through Iowa with hurricane-strength winds, severe thunderstorms, and large hail. The financial situation for home policy insurers in Iowa hasn't really improved in the last couple years. In 2023, for every dollar earned from homeowners policies in Iowa, insurers paid out $1.44 in losses and other costs, according to a New York Times analysis. At least 4 home insurance companies have completely dropped Iowa customers, including Pekin Insurance, Selena, Secura, and IMT Insurance. To add another thing for consumers to watch out for is insurance providers who have amended coverage to only pay the depreciated cost of item replacement, especially roofs. roofers report that some customers are not aware of this practice, and homeowners are left holding the proverbial bag when they need a new roof after storm damage. Their insurance adjuster may agree to the claim that the roof is damaged, but then adjust the payout based on the remaining life of the existing roof, which could mean homeowners are stuck paying thousands of dollars for a new roof if their damaged roof was on the older side. When insurance companies make changes through endorsements, these are called adjustments, and they must be submitted to the Iowa Insurance Division for approval. According to an article from May 31st in the Des Moines Register, some examples of adjustments being seen in Iowa are: IMT Insurance increased insurance rates on customers by 37% and said that it would cover hail damage for roofs 6 years and older only at the roof's actual cash value, a depreciated sum based on an expert's assessment of the roof. State Farm announced an 11% rate hike, and they introduced the option of replacement roof schedules. The policy decreased the percentage of a new roof's cost that State Farm will cover based on the previous roof's age. Nationwide Property and Casualty Group now requires all homeowners with shingle roofs that are at least 11 years old to use a roofing payment schedule if a wind or hailstorm damages their roof. A Des Moines Register review of the state of Iowa's 10 largest property insurance providers found that each company had adjusted its roof policies since 2020. Some made multiple changes. Of those 10 insurance providers, 7 have begun to pay for roofs at depreciated value, 2 have increased their customers' deductibles for roof claims, and 2 more have stopped covering for roof cosmetic damage. All of this finagling by home insurance providers is a big deal when buyers are shopping for homeowners insurance, because Fannie Mae and Freddie Mac, the government-backed mortgage securities that guarantee about 70% of mortgages in the U.S., have policies that state they will not cover homes unless those properties are insured at full replacement cost. Fannie and Freddie are important cogs in the country's home lending market. Owners of mortgage-backed securities want to protect the value of homes after storms because those homes are the collateral for those loans. If insurers don't cover the full replacement cost of roofs and customers can't pay for new ones, those investments deteriorate. If mortgage servicers don't ensure that the loans comply with Fannie and Freddie's policies, the enterprises could write a negative report after their annual inspections of their servicers. Fannie and Freddie could force the servicers to take corrective actions or risk losing their ability to work with them. Fannie and Freddie are currently not enforcing their policy of requiring full replacement cost insurance, but it is definitely a fault line between mortgage providers and insurance providers, and it could cause major problems for buyers. If Freddie and Fannie's policy enforcement changes, then lenders would need to buy gap coverage for homes with inadequate home insurance coverage, and that expense would be passed on to the consumer. Not to keep harping about roofs, but this is not only a problem for prospective home buyers. Inadequate roof coverage could also impact sellers during the sale of their home. Many insurers now require proof of a roof's age when underwriting a policy for a prospective buyer. Sometimes sellers don't have documentation of the last roof replacement, especially if it was put on before their tenure of home ownership. If a buyer cannot find an insurance provider willing to cover the property with a roof of unknown age at a rate that works for the buyer's budget, well, the deal could be at risk and the seller could find themselves in the position of being back at square one, looking for a new buyer, or be in the position of having to negotiate a new roof with that buyer in order to keep the deal together. According to an article written last year by NPR, American insurers already have a history of cutting back coverage in the face of disasters. The first big rupture in the U.S. insurance market happened a couple decades ago when most companies stopped covering flooding. Companies decided that flooding was uninsurable, said Don Hornstein, a professor at the University of North Carolina School of Law. That's because it is very complicated to figure out which places will flood and how often those floods will occur. That led the federal government to create the National Flood Insurance Program in 1968. And now that provides the vast majority of residential flood insurance in the US. The program is backed by taxpayer dollars, but it is chronically in debt and is increasingly unaffordable for homeowners because it wasn't designed for the enormous climate risk that the US now faces. So, you may be wondering, does Iowa have a safety net for homeowners who have been dropped by their home insurance carrier and are struggling to find new coverage? Yes, it's called the Iowa Fair Plan, and it is an insurer of last resort for qualified applicants. But truly, the option is a last resort. Policies must be applied for through an Iowa insurance agent, and coverage may not be as good as a traditional home insurance policy. On a personal note, my own homeowners insurance, which is through a place called Auto Owners Insurance, went up about $400, which is about 15% increase just this past year with no claims on my part. Tell me about your experience with homeowners insurance in Iowa in the past few years. Have your rates gone up? Have you made any claims, especially for roof damage? Have you had any trouble getting coverage for a new home? Hey, it's been fun, and I'll catch you later.